Success is the progressive realization of a worthy goal or ideal. Earl Nightingale. My friends, the progressive realization for us is obtained each and every day, 10 to 15 minutes. And if you will just spend that time in the market every day, following these charts, practice trading, learning by doing, filling out your weekly market worksheet, which you should be filling out today, your daily market worksheet, your trade worksheet. What are those worksheets? Well, they're in your show notes every day. If you're not seeing them, then maybe you're not subscribed at chartingwealth.com. Go there for free and subscribe. Also want to ask our Patreon members, have you made use? Did you today jump into one or two practice trades with those 20 weekly vertical crossovers? My success rate in using those this year has been 100%. I'm not saying that it's going to always be that way, but mine have been 100%. I just looked at my tally, 2% up and out on all of those, and every single one I have tried has worked. Now, I do them occasionally. I look through that list, I pick one out, I put the money into it, I do the practice trade, I set my limit order, good till canceled, both pre and post market, and let it ride. And they have worked time and time again. As I've said in the past, this year, all the ones I have worked on have been simply stock purchases going up. Because the market overall has been going up, 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 up with all the inflation. Now, what do we see? That brings me into today's show. What do we see happening here? Well, as we look at the charts, we can see where things have topped a few weeks ago and then slowly started rolling over. We had a big down week going back to December the 3rd, the week ending then, 2 weeks ago now. Big red down candle, weekly vertical crossover going down. What happened the next week, ending the 10th of December? We saw things sliding sideways, lots of indecision, trying to move up, getting close to doing that. And then, of course, what happened this week? Now we see a bigger green up candle, but look at what the price percent oscillator is doing. And also market down for the day on Friday, 1.37%. Price percent oscillators pulling away from the red signal line. Derivative oscillator going negative. Let's look at the 2-day. We can see the first day of this latest 2-day candle after a sideways slide for 4 days, heading down quite strongly. Price percent oscillator also pulling away from the red signal line, just like the weekly. Derivative oscillator gaining a little momentum. Look at the half day. It was trying to peak up and then rolled over hard in the morning on Friday. In the afternoon, we also saw down movement, derivative oscillator gaining downward momentum also. So, again, we see a sideways slide and then this progressive downward pressure. So, we'll continue to watch as we get into the shortened holiday week. We'll watch and see just what happens as we move throughout the course of this week on into the last trading week of the year, on into the new year. So we'll pay attention, watch as things progress, and learn. Now, what do we see going on with the Qs? It was down not as much, down 0.40%. Let me see, is that 4.48%? Sorry. And sometimes I can't read those red numbers. The green are a lot easier to read. And look at what we have here. We have a solid green spinning top. Now that's different than an open box. That's sort of a slowdown in the up movement. So again, more downward pressure there. Price percent oscillator pulling away from the red signal line. Derivative oscillator gaining lots more downward momentum. Remember, that derivative oscillator, I say it often, is a triple smooth version of the relative strength index. Those of you who know about the relative strength index, it is a leading, not a lagging indicator like the PPO. The price percent oscillator, which is a percentage version of the MACD, moving average convergence divergence indicator. So we have a leading and a lagging, and they are both moving away from the signal line, heading down. Now let's look at the 2-day. What do we see going on there? Well, we again see an acceleration of down movement, price percent oscillator heading down, derivative oscillator heading down. First day, big red down candle. This is the 5th day of red down candles heading down. Look at the half day. You can see where things popped up there in the afternoon on Wednesday and Thursday morning. Then, of course, moving down, recovering a little bit in the afternoon on Friday, but that price percent oscillator still heading down. Derivative oscillator negative, losing some downward momentum. Of course, that solid green spinning top with movement on the top and bottom is what caused that. So we will continue to watch as this downward pressure plays itself off in the market. What's going to pop the market up? I don't know. Is the market going to be devolving for the said future? Not sure. We saw that start to happen when things started moving over with 3 progressive weekly down candles back at the end of September, beginning of October, into mid-October, and then flattened out, popped up. So we'll see if the market's just digesting the latest gains, as we've seen it do again and again and again and again and again. Is it going to do that again, or is it going to be enough to roll it over for good for a long while? Don't know yet. We'll watch, wait, and see. That's what we do. We follow the market. We can't do anything but that. I can't make the market do what I want as much as I would like to. I've learned that doesn't work, so don't try it. So what do we see going on with 20-year bonds? We had that weekly vertical crossover back on the week ending the 12th of November, sliding sideways the next week and down, then sliding sideways and up a little the following week, then things popping up to the most recent high on the week ending the 3rd of December, then sort of devolving on into the next week ending the 10th, and of course this week ending the 17th. More devolution and uncertainty. Up for the day, 1.13%. Price percent oscillator still positive. Derivative oscillator still positive, losing upward momentum. Look at the 2-day right there on the 2-day trend line above the weekly. Green candle trying to form, but again has weakened a great deal. So we'll just continue to watch. Looked like it was going to cross over, and then boom, saved by the up movement on Friday. But that derivative oscillator is still gone negative. Look at the half day. We can see where it has rolled down, rolled up, down, and up again. So we'll keep watching, waiting, seeing how this is going to play out. Overall mood, though, still up on bonds, still down on both of our stock indexes. What about gold? Down for the day, 0.21%. First even showing of green we've seen now for about a month this week. Not an open box green, but a spinning solid green top means indecision, still tending down, not as strong as if it were a solid red top, but it's sort of a slowdown in that. You can see where the price percent oscillator, instead of crossing over, flattening out, derivative oscillator still barely green. Gold just wasn't willing to roll over this week. What do we see on the 2-day? Still negative, heading up as far as the derivative oscillator and the price percent oscillator goes. Nice green up candle, first day of the latest one forming after 8 days of really not a lot more than sideways sliding and some volatility. So we'll see where gold goes. We look again at what it's done over the last 2 days, popping up on Thursday and then sort of losing that as we came into Friday. Price percent oscillator losing some of its momentum. That derivative oscillator still oscillating up. So overall in gold, still negative on the weekly, positive on the 2-day. Lots of indecision there on gold. We'll see what happens as we roll into this next week. How about Bitcoin? How about the cryptocurrency market? Everything in crypto, for those of you who are Patreon members and follow charting crypto with us, we can see with Bitcoin, Ethereum, we can see the Bitcoin futures down. We can see and again, this is a blockchain and Bitcoin strategy down. We look at the 10 crypto index. It's popped up a little bit for the day. Some of those other cryptos must be doing a little better. And of course, we see the innovators down. We see, again, these other funds that are in the crypto space. Overall, my friends, crypto space, still lots of down movement. Look at this big down week. Now, are we going to get any rest on this 50-period moving average line, the 50-week moving average line. Is that going to give us any resistance? Don't know. We'll see. It's there as we end the week. That price percent oscillator still spiking down, derivative oscillator spiking down. No reason to be in Bitcoin at this point in any practice trade. Look at the 2-day. We can see where it had a little bit of slowdown in the down movement, and of course moved on into today with a 4.47% down move. If that was a stock, that would kill you. Bitcoin, it's par for the course. Hell, it could be up 8% on Monday. Who knows? Derivative oscillator is heading. I will tell you what we do know, though. Let me qualify that a little bit. We know that there is lots of volatility in Bitcoin, and every day it can shift around. But what do we know overall? Looking at our charts, price percent oscillator heading down, derivative oscillator still negative. That's on the 2-day. Weekly, price percent oscillator heading down, derivative oscillator gaining lots of momentum. What does this mean to us? It means lots of downward pressure. So even though there might be an up day here or there, overall the pressure on Bitcoin is down, and very decidedly down. We are paying attention to where things have sort of, tried to start settling out some, but again, we were hoping like right around here at the $47,000 mark, but we can see where it rolled on over further down. Now, we didn't have a crossover going down on the half day, and the price percent oscillator, flat derivative oscillator, gaining a little bit of momentum. So again, we'll watch, wait and see. We'll see it first. And what typically will happen, of course, is that the 2-day will rotate over going up, and then the weekly will follow it. And when we look at how well the charts have worked for us over the course of this last year, we can see that they have given us a lot of insight as to what's going on with Bitcoin and how it is reacting. That's what's so beautiful about technical analysis as opposed to fundamental analysis. Fundamental analysis tells you what something is potentially worth. Technical analysis tells you what it's worth right now. And by going back in time and using these formulas, these indicators, they can help you understand what's going on, how it's reacted in the past, and how it might react in the future. So I encourage you 10 to 15 minutes a day. That is all we ask. If you will devote the time, everything will come to you as you progress into the future. People say, how long will it take? How long is it going to take? I don't know. But the good thing is that once you get this down, once you learn this, then you will make up for all the time you spent. You just have to keep the faith, brother and sister. God bless my friends. All the best from the whole team at Charting Wealth World Headquarters. Merry Christmas.